In this episode, while I'm taking a walk here at a random park, we're going to discuss things that are going on in the options portfolio. Going to discuss some weird things going on in the stock market, movements you didn't expect to happen, and of course, we're going to take a little dive into my dating life and lessons learned. This is Investing in Real Life Show, episode 5. Let's get it. Oh, how's it going, world? This is Sophisticated Investing Life, and welcome back to the show, Investing in Real Life. Today's going to be a pretty interesting episode. I'm out here taking a walk. This is actually Saturday. I'm recording this on Saturday. Big Texas Tech game happening against UT in Austin, so of course I'm going to it. Definitely going to it, but just before going to it, wanted to record, keep you guys updated on the show. So let's just jump straight in and talk about the options portfolio. All right, let's get this thing rolling in this episode. So let's just touch on today's agenda. I'm going to give you a quick portfolio update. Like I mentioned before, I am so happy to be in February. Like it's already starting to show in results. I'm going to talk about the coronavirus. You know what virus I'm talking about, okay? I'm going to talk about it and how the market has not acted the way I would expect it to act, at least initially going on past last week. Another financial YouTube shout out, actually re-shouting out somebody I've shouted out before, is put out something new that I really like. And of course, we're going to touch on real life lesson, my love life. How interesting. Now, let's first start off for the month. Up about 0.4%. Well, for the week, up 0.4% going into this week, which is pretty good, which I actually feel really great about, right? Because this also includes me closing some trades, okay? So I closed that Broadcom call that it was a bugaboo for me, and I actually closed it for a little bit of a loss, which is fine, which is perfectly fine. Closed it, gross P&L loss of -$5, add transaction costs, -$9, perfectly fine. I didn't like having it on so long because I also knew opportunities were waiting, and I just didn't feel comfortable having buying power taken up, even though it probably would, if I would have waited a little bit longer, probably would have turned positive, but didn't want to wait. So I closed it down, then opened up 2 new positions and closed them. So what's the positions here? So we had the JP Morgan position we closed, as well as a quick win in 3 days span. I opened up a SPY position over the S&P 500, the ETF. Once the VIX index got high enough, above 15, that's when I really started looking at index ETFs, primarily because the liquidity is there and you can match whatever time frame you want. So ideally, I would love to have a trade on for time to expiration is 5 to 6 weeks. You can easily hit that time frame with the SPY index in a way you can't hit it with anything else. You don't have to depend. You can depend on the weeklies to give you enough liquidity, versus for a stock you should look only at the monthlies. But overall, it worked out. Both I kind of went a little early on JP Morgan, but it was fine. Still took a profit of about $14, and for the SPY, in 3 days, took in $32. Really good win. I actually put back on a SPY position for the following week. So yeah, we got a SPY position on. Also added a Facebook position, which I'm pretty excited about. Which, by the way, for Facebook, I'm already near profitability. So this is last updated. I'm already near profitability on it. Maybe on Monday, if the market's positive, who knows? But the next time the market's positive, and as long as the premium's still there, I'm gonna close Facebook out. I think the SPY will get there eventually, but Alibaba's still holding me back. Alibaba is still scary. I'm still upset with myself. Putting on the position. Now I even realize I didn't even collect enough premium to be having these issues, right? So I am really upset with myself about it, and I still am in the waiting game. It's still a negative profit right now, right? It's still a negative profit, $62, probably be more like 64, 65 after transaction cost. I'm pretty much just waiting for earnings to hit at the end of this week, and I am just praying that it does not
crashed the stock all the way down to $200. Alibaba right now is around at $215. So if the stock doesn't crash, everything will be okay. I can close out the position at a win. Even at a minor loss, I'm willing to walk away because I know there's a lot of opportunities out there for me. Now, what are some of these opportunities I am looking at? By the way, just want to show this casino option selling thing, the simulator that I'm in. If it wasn't for me being an idiot and putting on these two bad trades, which was supposed to be calls, it was me. I mean, they were supposed to be puts, but I put them in as calls, understanding the system. Literally, if it wasn't for these two bad trades, this negative 4.1 would be pretty much break even. It would probably be right around like zero, which is good because in my spreadsheet, I'm only tracking realized profit and loss, whereas this tracks not only the realized profit and loss, but also any unrealized profit and loss, which is why it's a much lower number. But if it wasn't for me making those two bad trades that if I was in my TD Ameritrade account, Thinkorswim, I wouldn't have made because I could clearly see it. I didn't truly understand the system. I'll be all good. So feeling really good about that, right? Feeling pretty good. So let's look at some of these things I'm looking at going forward. First name is Amgen. Looking at stocks at $229 a share right now. If we go out in time to the monthlies, which is third Friday of the month, in this case, it will be March 20th. Right now, I am looking, scrolling down, I want to say it was the 210s. Yeah, well, actually, because of the delta, I'm actually looking more at the 205. And probably, if these numbers hold up, if I can collect about $65, $70 here, so whether that be a 10-point spread at the 195 or a 15-point spread at the 190, I am going to be pretty happy. I'm going to be in pretty good shape about that. Of course, we need the stock to start turning up, but this is a good trade to me. All right, next up, Disney. All right, if things load up here, Disney looks like an interesting one to me. It's one I was looking at before, and I actually was indecisive on should I do Disney versus do Facebook as one of my latest trades, and I decided on Facebook simply because I collected more premium. Oh, I chose the wrong date. I collected more premium, and I can actually do it with a 10-point spread. If I was going to do Disney, I was going to sell it naked and trying to stay disciplined. My account size isn't big enough to sell naked. It really wasn't big enough to sell naked to JP Morgan, so I showed not big enough to sell Walt Disney since it will be at a similar level. With that said, if I were to break my rule again and sell naked, it will probably be right here at the 130, or potentially sell to 130 and also make it a 15-point spread at the 115. Where I'll collect enough premium for it to actually be worth it, right? Last stock that I'm looking at for this week is Nike. So Nike is pretty interesting, just like all the other two stocks, about middle of the trading range, which isn't ideal, but when volatility is coming down in the market, when the VIX is suppressing, things are starting to normalize, it's not a bad trade. So at Nike, stock's around $100 right now. I will look probably at the 90, and I will sell that naked. So that the strike price is low enough to where I can sell naked, and it won't be too much of a concern. I mean, I'm still not happy about it, but not too much of a concern. I could also put a 10-point spread on and sell at this closing price of nearly zero, but I need to get into the account, my account system, really see is that true or not. That seems a little sketch, a little wonky. But those are where I'm looking. Go forward to, and as long as Alibaba doesn't kill me, we are good. All right, so I want to talk about this virus situation, coronavirus, and how the markets have not been acting like I expected. I mean, the stock market was up. By the way, I was fearful. I was so scared about my Alibaba position on this past Monday, because it was like, more news came in about the coronavirus. It is not good news. It's all bad. More. It just was rough. I was just scared. All right, I was scared. Market's gonna fall. I'm already kind of on edge with this Alibaba position. And then for 2 days, Monday and Tuesday, the market went up by plus 1%. And if I'm honest with myself, I should have closed out the Alibaba position then, because it was low enough for me to close it out at a minor loss. The loss would have been about $15, $20. But as you can see, in my trades can easily make that up in one trade, right? With some of these wins, could have easily made that up, freed up the buying power, and used it effectively. But I didn't. I was also traveling for work last week, so I didn't really focus too much on it. That's one good thing about the way I trade. You don't necessarily have to focus on it day to day if you don't want to. But I should have. I should have knocked out the Alibaba position. Now that I didn't, and now it's back in a bad shape, and now I'm just waiting for earnings. But this coronavirus is just not acting the way you would expect. So Monday and Tuesday, the Bank of China, the Fed for China, pumped money into the stock market, and then Wednesday, Thursday, you got China admitting that they were committing to cutting taxes, and it's like, okay, cutting tariffs. It's like, okay, you all are just doing whatever needs to be done for the coronavirus to stop affecting the markets. And the markets read it, people in the market participants read it as, if, things hit shambles, it's okay. The Bank of China, they got us. The Fed for China, they got us. And that is, to be honest, a scary thought. A scary thought. It's bad enough that if it happens for a recession in the U.S., okay, that's one thing, or recession. And this is recession worthy in China. I will admit that, but it's also at the same time like, yeah, economic activity slowed down in China because of this virus, but it hasn't slowed down over an extended period of time for you to really pump money into the markets. So now it's a really like any whiff of something going wrong, don't worry, somebody's going to bail us out. The U.S. is going to pump money into the markets. The EU is going to pump money into the markets. China's going to pump money into the markets. Somebody's going to pump money into the markets, right? And that is the wrong read about this, right? That's the wrong read. It is a little scary that's the read, and I almost am fearful that market participants are sleeping at the wheel. Now, Friday was better. Friday was much more what I expected, with more bad news with the virus. The market went down a little bit, and I expect that to happen again this week, right? I expect that to happen again this week. I expect kind of a range bound, like go up a little, go down a little throughout the week, in closer to flat. That's what I'm expecting. Maybe a little bit positive, a little bit negative. But either way, that is how things should be in normal markets. We haven't been in a normal market since the global financial crisis, because of how the Federal Reserve and how central banks are willing to step in a way that they haven't in the past. But it's still something. It's still something to keep in mind, that this is how things supposed to be. It shouldn't be as soon as we hit an issue, the banks come in. No, it shouldn't be that way. Now, quick YouTube shout out. Again, it is the Swedish investor. Yes, I'm reaching out to him again. Now, this time around, it's for this one he put out. Picking Growth Stocks by T. Rowe Price Jr. A book I've actually read. And if you watched me in the past, you know that I was more of a growth investor. I've kind of turned more into a defensive growth investor, and I'm actually going to have a video coming out over the next, probably sometime in March, about reviewing my top 5 stock picks, growth stock picks for 2020, see how they've done so far. Last time I checked up on them, all 5 of them were beating the market, right? So I'm feeling pretty good about them, and it's a small portfolio for me, but it still feels pretty nice, like, hey, I still got it, and I'm not even trying to like I used to, right? So keep that out. But again, check out the Swedish investor. Check out his channel. It is pretty good. It's pretty good. Lots of books, especially if you're more of a value person. This is the place to go. He reviewed a lot of value stuff, and just about books about financial or investment topics in general. All right. With all that said, now let's move on to our main presentation, discussing my love life, and it's a good one.
Let's take a quick touch on my dating life and why it's kind of important. And Valentine's Day right around the corner, looking forward to it this Friday. It's going to be great. And actually something interesting has happened. It just hit me that I have, counting this Valentine's Day, 3 Valentine's Days in a row. It's 3 different women. And it's kind of like, Michael, what, you was like a player or something? No, not at all. I wouldn't call myself that at all. Not even close. Just had to kind of realize some things, right? First relationship right out of college. I thought I knew what I wanted. She thought she knew what she wanted. Things didn't work out, whatever. Then I kind of rushed into the second relationship. Didn't really figure out what I wanted. And then what I thought I wanted, I didn't really want. Right? So why that didn't work out. This third time, it's definitely the charm. Definitely a charm, because I actually took a step back. Right? I took a step back and really realized, Michael, what do you really want out of a relationship? What do you really want out of a relationship? What's the role you want to play? What's the role you want your significant other to play? The role you want the woman to play. So I actually took more of that step. Like, what do I want, right? And of course, it took some trial and error, dating different people to kind of figure that out. I finally got to the point where I'm pretty sure I figured it out. And I am feeling pretty good about this Valentine's Day. As in the past, I thought I found somebody, but now it's like, I know I found somebody, right? And it wasn't even what I was looking for. And that is the difference. So what's the investing in real life lesson here? Well, you have to know what you want, right? You have to know what you want, but you only learn that through experiences. You will only learn that through different experiences, trying different things. So for those who are interested in investing, you have to just jump in. You have to just jump in and try some things, right? You have to try some things, whether that be the stock market itself, maybe basic dividend investing, basic strategies. Give the options thing a try, see how you like it. Give real estate a try, see how you like it. You have to try. You won't know what you really like and won't you have conviction in what you like until you try something. So that is probably the biggest lesson here. Just try something and figure out if you like it or not. Because there's some things, like for example, some people really think that real estate's the best. It's the best way to build wealth. And it's proven over time, maybe that's the best way. But my comfort level so far hasn't been there. Vice versa. I think stock market and option market is the best, but it's just something about the transaction part of real estate they prefer, which is perfectly fine. Perfectly fine. Everybody to each his own. And you just have to find that thing that gets your motor going, right? You're not going to know until you try. You got to try different options, but once you try them and you find that one thing, go all in, right? And I can tell you right now, you won't regret it. Like I'm not regretting those decisions right now. So yeah, that is it for the show today. Thank you all for watching. Next week, we're going to go back and visit Black history and actually talk about the pursuit of happiness. If you know the movie I'm referencing, then you know what I'm going to be talking about. You have an idea, but maybe at a unique angle. So yes, watch out for that next week. Thank you for watching. Stay sophisticated.